Hey everybody, good afternoon and welcome to 12-Minute Trading. My name is Doc Severson. Today is Monday, the 21st of August. Welcome back to the bear. No, I think initially we're going to have a little bit of a pullback here. We're down about 6% on the S&Ps, a little bit more than that on the Nasdaq, but we are starting to see a little bit of accumulation. And this might be the A wave of the ABC. So let's get into it here. I'm going to show you guys what I'm talking about with this whole ABC thing. Now, before I go any further, I am not an Elliott wave expert. I am not an Elliottician. I don't know all the sub-minuets and things like that, but I do understand kind of the sentiment involved behind the five-wave pattern that we typically will see. So if you just break it up into this one here, this pattern here, which has been going on since March, we can count this as 1, 2, 3. I didn't draw that very well, but 4 and then 5. So we have 5 waves to the upside that finished off the weekly wave into exhaustion. That totally makes sense. And then typically what we're going to see from there is an ABC component before we set up for the next swing. So we might be in this ABC corrective period for the next month or two. Again, maybe the Elliotticians can predict exactly how long we were in that. I don't believe that, but I do understand the structure and I do respect the structure. I do see that all the time. Because if you think about it, it makes sense for what actually happens. So we eventually dump off the top. And then at some point here, we are going to see a relief rally. And I think it's very, very unlikely that that relief rally ends up making new highs. It could, but this is usually the time of year that we go through a lot of introspection and a lot of traps are set during the next month or two. So it wouldn't surprise me at all to see this rally up to a lower high just when everybody says, hey, the coast is clear, and then we see the final move down to what I think might be 4,300, maybe even lower than that. I don't know that we necessarily need to go all the way down to 4,200, which was the original breakout. But that would only be a 50% retracement of the entire move since March. Still very, very normal. Welcome aboard, everybody. Again, this is 12-Minute Trading. My name's Doc Severson. Dave is not with us here. He's coming back from way north in Quebec, and he ran another Ironman this weekend. I don't know how he did. So he'll be checking in sometime tomorrow when we should be back on normal schedule next week. So this is what's called an ABC correction for that. So you understand what to look for. So this one has definitely come down pretty deep, and the deeper that this goes down, the more likely we are to see some type of lower high setup. But not necessarily a bad thing because this sets up much, much better for the. So again, notice what's happening here in the weekly chart. The weekly chart's just pulling back. So many people freak out after 3 weeks. It's like, oh my God, it's the end of the world. No, this is what has to happen, right? We have to go through this little spell here, this little corrective spell, if we want higher prices down the road. So welcome aboard. For those of you that are live, that have joined me live here today, if you have any specific questions you want to ask, now's probably the time to get them in because this is going to be a relatively abbreviated live update session because it's just me. And unless we have a lot of questions coming up, we'll probably be done in the next 10 minutes or so. Or if you're watching this through some type of replay, which is what I assume most of you will be watching this on a replay, maybe when you get off from work or whatever. If you have any questions about the material and the content or anything else that we do, just go ahead and shoot us a note, support@12minutetrading.com. And we can reply and respond to your question in next week's session as well, or maybe even just directly to you. Okay, so that's the S&P 500. Notice what's going on today. We have a little bit of a bifurcated market. Since the S&P has got about 28% of its market value from NASDAQ, the fact that the NASDAQ is working out pretty well today, so it's up about 1.5%. You can see that the XLK ETF sector spider is by far leading the market. XLY is usually composed with a fair amount of tech, as is communications. So we actually have energy down today. Energy is down today. So let's also see what's happening within the NASDAQ. So of this NASDAQ, which ones are leading? So we have CrowdStrike, AMD, and Applied Materials is strong today. Apple is still not there. Apple is still severely wounded. Adobe is doing pretty well today. Moderna, Palo Alto had a huge move this weekend. Palo Alto had a huge move. And let's see if there's anybody else here. Anybody else of note? No, just generally a pretty good performance. I mean, it's 2-to-1 advancers over decliners in the NASDAQ. So it's not huge, 1.48%. If it can hold it into the end of the day, is not a huge deal, but it at least is enough to get things turned around here. Here was the S&P intraday. We set up our opening range, and then from there we went after the lower expected move. And that totally makes sense because that is, let's see if that's a retest of Friday's lows. No, it's not quite a retest of Friday's lows, but at least the point behind this is sort of what you do want to see behind a day. If you want a relief rally, what you want to see is early weakness and late day strength. Early weakness, late day strength. You don't want to see early strength like what we had this morning. That's going to get faded. That's going to get pounded on, just like the old whack-a-mole game, right? So you remember the whack-a-mole game you played at the state fair. Every time one of those things would pop out, you'd smack it back down. And this is what happens during corrective markets, is you get whack-a-mole behavior. So what you want is that late day move. That's where things really start to improve. Okay? So let's take a quick tour around the markets. Again, I'm taking any kind of questions if you have anything that you want to respond back in. Here's the NASDAQ. The NASDAQ has been hit pretty hard. And that's actually a lower high, lower low combination on the NASDAQ. That set the bull trap and really set the trapdoor open for this thing to the downside. But still not down to a 38.2 for the March rally. So that's fair. And let's also look at the Dow. The Dow is getting hit pretty hard today. It is in decline today compared to the S&P, although it's off of the bottom. So we almost have a tweezer bottom setting up on the Dow. Now notice that these daily charts are in exhaustion as I look at them. So there's the Dow in exhaustion to the downside. Here's the NASDAQ. Now it's off of exhaustion, but it's already rallied quite a bit today. And the S&P is definitely in exhaustion as well too. So this is not surprising to see this going on. Now this weekend, what I did was I went over some very typical technical criteria. So let's look at these here. So one of them is just the standard old RSI with a period of 14. And actually just for grins, I've gone to a period of 9 lately just because the market is operating faster. And let's go down to that. And yes, indeed, if we go down to a period of 9, we actually have an oversold signal. And we haven't had one of those since we had our little miniature bank crisis back in March. So a period of 9 just seems to be working out better. So we had several of these. Of course, you can see these signals where we had, according to the RSI, oversold signals. Several of them back in 2022, as you would expect to see during a bear market, which is what it was. Okay, lots of these. And so this is the first one that we've seen since that coming along, but it's not on the 14 period. Something else that I will watch from time to time is called the McClellan oscillator. Let's see if I can find this thing. There we go. Now, the McClellan oscillator, this is really for the big sell-offs. And you want to see something down here like below minus 300. So we had those. We had a couple of those down in 2018 at the early part of the year, and then at the late part of the year, we of course had a very severe signal back in 2020 during the pandemic. And then since then, really the deepest signal that we had was back last year around September, late September, and this marked the end of the bear. It really did. So my assumption is that we're no longer in the bear, although people want to believe that we're still in the bear. And then during the March sell-off, we got to about 323. So again, that's another signal on the McClellan. Now, how does this latest signal fare? It got down to about 284. So it almost got down. So this is as of Thursday, it almost got down to minus 300 on the McClellan. So we're almost there. We were almost there. We're in the range where you start to see a bounce. In the range where you start to see a bounce. And that's on the ES. On the SPX, we have a pretty decent move today. Pretty decent move, and we're continuing to expand to the upside. So we'll keep our eyes on this and see if there's anything that we can play. So again, it wouldn't surprise me, especially I think the market might be looking forward to NVIDIA earnings on Wednesday, especially tech. And those were some of the strongest earnings that the street has ever seen, period, ever. So we'll see if they can repeat that performance on Wednesday. It comes in after market close. And then, of course, we have Friday is Jackson Hole. Jackson Hole is where the Fed goes to experiment with new policy and to throw out a new idea. It's almost a way to put a close to the old year and start out the new year, is Jackson Hole. And that comes Friday morning, about 10:05 is when Jerome Powell will speak. Last year was pretty terrible because all he did was say, blah, 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 raising rates, got to raise rates. Oh, yeah, right. It was just really bad. And you can see what happened to the market as of Jackson Hole. Let's go out to our daily chart here. So Jackson Hole was right around here, right there. And you can see how poorly that the market handled it. Set up for a lower high and rolled over for the next 2 months. I mean, that cost us 2 months of pain and misery to the downside. The S&P went from 4,200 down to 3,500. 700-point move. That was pretty brutal. So you can see why the McClellan certainly made a low there. So today we're seeing some positive price movement after our 6% return. But again, I don't get your hopes up that this is going to lead to all-time highs. I think this will pop up to maybe, who knows, maybe 4,500. Set up for a lower high. Maybe even we'll get there on Friday. I don't know. But it's setting up for a potential lower high, maybe a retest of the lows. That's what the whole ABC thing is for. Okay, last call for any questions for today, because that is pretty much what I wanted to go over for today. To walk you guys through what's going on, we're now above the opening range. Watch how it handles the upper expected move for today. And we're also seeing some market internals starting to turn around as well. So let's bring those over. You can see the market internals where the advancers minus decliners were as bad as minus 300 at one point today. Now we're still negative. There's still more decliners than advancers. But you can see overall that the ticks have increased on the NYSE. Now we're starting to go pretty positive. So looking forward to a strong last 75 minutes of the trading day. So we'll see if we get that. Okay, nothing seen, nothing heard. Again, if you're watching this on a replay, let us know if there's anything that we can cover for next week's session. Be happy to do it. For 12-minute trading. And for the absent Dave Lukas, I'm Doc Severson signing off for today's Market Minute. Thanks, everybody. And we'll see you soon. All right. Adios.